Hey there, curious minds. Ever get that nagging feeling that there's a secret playground for the super rich? A place where money multiplies like desert flowers after a rare rain? Well, pull up a virtual seat because today we're diving headfirst into the shimmering sands of Dubai's real estate market. Is it the ultimate treasure chest overflowing with gold for savvy investors? Or could it be a cleverly disguised pit of vipers ready to strike when you least expect it? Whispers echo across the globe, from Hollywood Hills to Wall Street skyscrapers, that Dubai is now the new El Dorado. We're talking A-list celebrities, the titans of industry, all seemingly hypnotized by the glint of Dubai's property market. It's not just surviving, it's thriving, morphing into the undisputed champion of luxury living. Imagine a place so flush with cash that the very concept of taxes, it all feels like a forgotten relic from a dusty history book. The numbers being thrown around are mind-boggling. Forget your typical market fluctuations. Dubai is charting its own course, smashing price records per square foot like they're fragile glass. Jaw-dropping deals are happening daily, with buyers shelling out fortunes. We're talking anywhere from a cool 10 million to hundreds of millions of dollars, each transaction eclipsing the last. This isn't just about buying bricks and mortar, it's about planting a flag in a global business hub, a dazzling jewel in the crown of luxury tourism. But the real enchantment, the truly captivating part of the story, lies in the realm of rental income. This is where the idea of passive income transforms from a dream into a tangible reality. That same million rupee property in Mumbai, it might fetch you a respectable 30 to 40,000 rupees in rent each month. In Delhi, perhaps a bit less, hovering around 25 to 35,000. But Dubai, brace yourself, we're talking a jaw-dropping 70,000 to a staggering 1.2 lakh rupees every single month. And here's the magic spell, the ingredient that makes investors' eyes gleam like the city lights at night. While Mumbai and Delhi will politely, or not so politely, take a hefty 20 to 30% slice of that rental pie in taxes, Dubai simply waves its hand and says, keep it all. Zero tax on rental income, zero on capital gains, zero property tax. It's like discovering a hidden oasis overflowing with gold and there's no taxman in sight to demand his share. The sales pitch is almost poetic in its simplicity. Compare the struggle of finding a decent two-bedroom apartment under 2 crore rupees in Mumbai's crowded landscape, or the reality of spending crores in Delhi only to end up in a congested colony plagued by traffic jams and power cuts. Dubai, for the same investment, offers a leap into a world of luxury apartments, boasting world-class infrastructure, sleek high-speed roads, an absence of choking pollution, and that sweet, sweet liberation from property tax. It sounds almost utopian, doesn't it? Too good to be true, perhaps? First, let's talk about the thrill of growth, capital appreciation. When you invest your hard-earned money, you want it to multiply, right? But by how much? Imagine planting $1 million in the fertile grounds of Dubai, London, New York, and Mumbai. Year after year, London might yield a respectable 4% growth. A steady climb, New York might offer a slightly more exhilarating 6%. Mumbai a consistent 4 to 5%. But Dubai? Dubai is the financial rocket, potentially soaring by a staggering 5 to 8% every single year. That $1 million apartment you snagged in downtown Dubai back in 2015, today it could very well be worth a cool $2 million. And the best part? Not a single dollar lost to capital gains tax. Compare that to London, India, and the US, all eager to claim their 20% slice of your profit. In the realm of pure growth, Dubai wears the crown. And the story of taxes repeats its captivating refrain. While London and New York might politely or not so politely demand a 20 to 45% cut of that rental income, Dubai simply smiles and says, it's all yours. Zero tax on rental income. This is the siren song that has lured investors from every corner of the globe. Europeans are flocking to the Emirates, snapping up luxurious villas complete with infinity pools and private cinemas, all chasing the promise of a prosperous post-pandemic future. Russian billionaires, crypto pioneers, and affluent individuals from India and Asia are all joining this gold rush, seeking second homes in this desert oasis of opportunity. To delve deeper into the health of Dubai's market, we need to examine the housing absorption rate, essentially how quickly are those shiny new apartments being bought or rented. Measured by the number of units sold divided by the total units available multiplied by 100, this metric tells us if Dubai's properties are flying off the shelves or languishing, gathering dust and inching closer to a potential crash. An 80% absorption rate, for example, means that for every 100 available units, 80 are snapped up. And here's where Dubai truly shines. While New York boasts a respectable 82% absorption rate and Mumbai a slightly higher 83%, Dubai stands tall at an impressive 89%. Even more astonishing is the absorption rate for luxury properties in Dubai, which sits at a staggering 95%. This means that many high-end homes are being sold even before the foundations are laid. The demand, it seems, is insatiable. But before we get carried away by these impressive figures, let's confront a critical question. Is this growth sustainable? Can the average person even afford to buy into this dream? To answer this, we need to look at the price-to-income ratio, or PIR, a measure of the median home price divided by the median household income. A PIR below 4 is generally considered healthy and affordable for the local population. A ratio between 4 and 6 suggests that homes are somewhat affordable, but once you climb above 6, it indicates that homes are becoming expensive, potentially accessible only to the upper echelons of society. And anything soaring above 10, that signals a market where homes are primarily within reach of only the highest income earners. Now, let's look at the numbers. Dubai's PIR sits at 6.7. This places it firmly in the expensive category, suggesting that home ownership is largely confined to medium and high income earners. Compare this to New York's daunting 14.6 and London's even more staggering 19.5, where housing affordability is a significant crisis. And then there's Mumbai with a PIR that soars above 30, painting a stark picture of a market where housing is almost entirely out of reach for the average person. If property prices continue to outpace income growth, it creates an unsustainable bubble that could burst at any moment. Dubai might be a jackpot, but who exactly is hitting the jackpot? But here's where the Dubai narrative takes another unexpected turn, a twist that makes investors positively giddy: the rental yield versus mortgage ratio. In most major cities, buying a home with a mortgage often means that your rental income barely covers the monthly installments, leaving you to bridge the gap from your own pocket. But Dubai seems to defy this conventional wisdom. In many cases, the rental income you generate from your property can completely cover your mortgage payments, effectively making your house practically free after the initial down payment. Then there's the illusion of zero tax. Talk to any real estate agent in Dubai and they'll likely paint a picture of a tax-free paradise. But here's what they often conveniently omit. If you're an Indian investor, your home country still has a claim on your Dubai earnings. Any rent you collect in Dubai must be declared in India and will be taxed according to your income tax slab, which can range from 5 to 30%. And if you decide to sell your Dubai property for a profit, India's capital tax gains will still apply, just as it would for any other foreign asset. Failing to report this income can land you in serious legal trouble. So while Dubai itself might not tax you, your home country's taxman still has a long arm. Finally, we arrive at the ever-present threat of a market bubble. Dubai, with its seemingly unstoppable ascent, might appear bulletproof, but seasoned investors understand a fundamental truth. Every real estate market, without exception, eventually undergoes a correction. The million-dollar question is, will Dubai experience another significant downturn mirroring the events of 2008 to 2009? So, is Dubai's real estate market a glittering gold mine or a cleverly disguised landmine? The answer, as we've discovered, is complex and nuanced. If you approach it with your eyes wide open, diligently assess the risks, choose your location wisely, and possess the capital to invest strategically, Dubai can indeed be a treasure trove of opportunity. But if you stumble in blindly, lured solely by the promise of tax-free riches and unchecked growth, that same alluring landscape might not just be as good for you.